I've had a question from a reader about interest rates. She says, with interest rates going up, where does that leave savings? Good question. Now, generally, when interest rates go up, the banks and building societies kind of increase the interest rate for their savings accounts, only a little bit, not usually actually as much as the actual rise in the Bank of England base rate. Funny that. So for savers, that's pretty good news. You're getting a better interest on your savings, except for inflation. Because as you know, inflation is the rate of price rises over 12 months. And the more prices rise, the less your money is worth going forward, because you have to use more of your pounds and pence to buy things now that you were buying 12 months ago for less money. So as prices rise, your money is worth less. So your money needs to work harder to be worth more. And that means that anything that you've got your money in, any savings, any investments, needs to make at least what is inflation in order to keep up with the price rises. Inflation at the moment is 10.1%. So ideally, that means that you need to have your money in products that give you at least 10.1%. That is really hard. And certainly when it comes to savings, I mean, you know, the best you can get is about, well, maximum 3% at the moment, maybe 3.1%. Ooh, that's already 7% lower than inflation. So with your money in a savings account, even if it's 4%, even if it's 5%, you're still not keeping up with the rate of inflation. So your money is still losing value while it's sitting there. What can you do? Well, it is a good idea to keep some money in savings. I think it's what I do, for just in case, you know, but no more than you have to. And the rest of it ideally needs to be in products that are going to at least get, you know, somewhere close to 10%. So that means your pension, and this is for long term, really, not short term, pensions, stocks and shares. Also think about gold accounts, gold backed accounts, gold itself, silver. That tends to keep up with inflation, not always, but generally speaking, it does. So yeah, savings are okay, but not for very much of your money, I'm afraid.